All right, let's get right into it. The market today was dealing with a serious inflationary hangover. We're talking a nasty mix of geopolitical tension and, some real sticker shock at the pump. And wow, it was just a sea of red across the board. The S&P 500 slipped, the Dow dropped, and the tech-heavy Nasdaq, it took the biggest punch, shedding nearly a full percent. So what's driving all this? Well, it's an inflation shock, driven by energy, with oil prices creeping up near that dreaded $100 a barrel mark. And because of that, Wall Street is officially spooked that any hope we had for Fed rate cuts, well, that's pretty much off the table now. But the real story today isn't just in those big, broad numbers. Nah, it's in the three key themes that really defined the trading day. A huge shakeup in software, a very worrying crack in consumer spending, and a surprising hunt for safety. So first up, let's talk about the creative software titan, Adobe. Now, you know this is a name that's supposed to be a rock-solid part of any tech portfolio, a bedrock of stability. Yeah, not today. Adobe got hit with a truly painful slide, dropping over 7.5% on some seriously heavy selling from the big institutions. I mean, this is the kind of move that makes portfolio managers' stomachs just drop. So you have to ask, why the panic? Well, it was a devastating 1-2 punch. First, you get the shocking news that their CEO of 18 years is leaving. In a market this nervous, that alone is a massive red flag. But then you combine that with this growing fear that generative AI could just blow up Adobe's entire business moat. Well, let's just say the big money, they didn't wait around to see what would happen. They just hit the exits. Fast. Okay, let's move on to our next story, because this one is a major, major signal for the broader economy. We're talking about Ulta Beauty, which is a key bellwether for how the average American consumer is really feeling. And this is just a staggering drop. Ulta absolutely cratered, tumbling over 14%. That made it the single worst performing stock in the entire S&P 500 today. When a consumer name like this moves so violently, you have to pay attention. It's a massive tell. Now, this is where it gets really interesting, the why behind the drop. Ulta's profit margins got squeezed, and they got squeezed hard. It was driven by a massive 23% spike in their SG&A expenses. That's basically the cost of running the business. And see, beauty spending is historically super resilient. They call it the lipstick indicator because people still buy small luxuries even in tough times. So for Ulta to show this kind of weakness, it's a huge sign that retailers are losing their pricing power and that the inflation-squeezed consumer is finally truly tapped out. But, amidst all of that carnage, there was one fascinating pocket of strength. Our final case study today is MicroStrategy, the enterprise software company that has, famously, become a publicly traded proxy for Bitcoin. And would you look at that, a splash of neon green in a sea of red. While pretty much the rest of the market was bleeding out, MicroStrategy actually pushed higher with some pretty strong momentum, gaining almost 2%. And this just perfectly illustrates the dynamic that's happening right now. As all those traditional stocks were selling off on oil shock and inflation fears, Bitcoin held strong. So investors started piling into MicroStrategy, treating it as what they call a non-correlated safe haven, basically a lifeboat to escape the very geopolitical chaos that was sinking everything else. Capital is actively looking for shelter outside the traditional system. So this slide right here really sums up the whole story we saw today. On the left, you've got your traditional markets just getting hammered by all these macro forces. And on the right, you have an asset like MicroStrategy, which is attracting capital for the exact same reason. It's seen as a hedge against all that chaos, a digital lifeboat. Okay, so that was the deep dive. Now, let's get you armed and ready for your team huddles and client calls tomorrow. Here is exactly what you can say to sound like you are completely on top of your game. First, on Adobe, here's your line. Adobe dropping over 7.5% down to the 249 range on the CEO departure news is a huge red flag for the software sleeve. It's a great reminder to audit our exposure to any legacy tech names undergoing leadership transitions right now. Next, regarding the consumer, here's your take. Did you see Ulta crater over 14% today? That is a massive macroeconomic tell for the consumer discretionary space. It means the energy squeeze is actually destroying everyday demand. And on that surprising pocket of strength, you'll point this out. MicroStrategy grinding higher while the rest of the market bleeds is a fascinating dynamic. It shows that institutional capital is desperately looking for high beta assets that aren't directly correlated to the Strait of Hormuz. And that massive plunge in Adobe really brings up a critical question for all of us, especially in this kind of market environment. Does unexpected executive turnover make you instantly sell a stock in this environment, or do you view the panic as a buying opportunity? Comment below, subscribe to Market Fluency for your daily edge.